Describe the brief on the principle of technical analysis and is based. That file of technical analysis is based on the following assumption: the market discount everything, price moves in trend, and historic trend in repeat itself. The market discount everything. The technical analysis assumes that any given time the stock price reflects everything that has could affect the companies, including fundamental factors. Technical analysis here believes that companies fundamental along with the broader economic factor that analyze market psychological and all prices into stock moving or stock removing and need to actually consider these factors separately. This only leaves analysis on the price movement, which is technical theory, views and product of supply and product of demand, supply and demand in the particular stock market. In one particular stock market, what is the discount, everything, how is it been moving, what is the buying, selling demand, that is the thing. Price moving trend. Technical analysis, the price moving or believed to be a flow of trend. It's a trend. The price moving is a trend. This means that after a trend is established, a future movement is more likely to be same direction as a trend that is against it. So the trend is being formed when there isn't similar activities happened in the share market for a certain period. And we believe though if it pertains more, it is upward trend. That's been said. Most significant trading strategies are based on this assumption. So based on the past, even we believe so it is upward trend. That is, history tends to repeat itself. Another important idea is technical analysis. Is history tends to repeat itself. Mainly in terms of price movement. The repetitive nature of price movement is attributed to market psychology. That is, market participants tend to provide a consistent reaction to similar market stimuli over time. Technical analysis uses a chart pattern to analyze the price market movement and understand the trends. What is the trend they will see? So based on this market, this is the trend, and this has happened previously like this. So the history always repeats. It was not going to be unique every day, but it will repeat. So although many of these charts have been used more than 100 years, they were still believed to be are relevant because they illustrate a pattern in the price movement that often repeat themselves. They often repeat themselves. It's going to be when price goes up, they will come some. That's a pattern that has been happening all over the time. So it is so this price patterns and trend analysis all to believe that it's happened early is going to repeat itself. So it's a pattern analysis.